What's going on, guys? Welcome to our market update call. So, just to briefly go over what happened. So, kind of crazy reactions at the end of it. This is exactly what the administration wanted to see, with the reciprocal tariffs that came in place. Like right here is just like a screenshot of the reciprocal tariffs, right? Compared to how much they're charging us. So as you can see, like the median is 10%, and more likely there's going to be more negotiations. But in this list, we don't see Canada and Mexico, right? So I think that that is going to be one of the things we're going to focus on as well to see how it goes between Canada and Mexico. But also, what really hurt is right here the European Union, and plus China. So, like China and Europe got it the worst, pretty much. It's looking like because they both combine. When it comes to tariffs combined, definitely Europe and China is definitely taking a huge hit. But this could also be reciprocal. We saw that there was headlines that Europe is on the verge. There's going to be negotiations, right? That could probably fix this problem, but as of now, with this list coming out and them seeing it, this is what is causing the risk off market. Like even looking at equities pushing lower. Oh man, this was massive. And one second. So when it came to equities, this is what we wanted to see. This is what I was saying the whole day was, and y'all could also check the live call when I explain we want to see those buys when it comes to, like, look right here with Nasdaq and US 30. Like that upside move is just going to set up for better opportunities for sales, right? And that's exactly what we got. And it was just wait, like once it was not about knowing exactly what he was going to say. It was just looking at the market's reactions once he said it. And this is nothing new. Every single time he brought up tariffs, every single time he brought up tariffs, equities sell off. We see a huge risk off reaction every single time he brought it up. So it's not a surprise that we're seeing the reaction once again. So this is what's really is going on. But let me just get through the update so far. So we can see that equities end up closing lower at the end of the session. But before market close, equities was bullish, but this downside happened after NYSE opened, so it's not going to show. Because if you look at the news reports, right, for this day, he did it at 4 p.m. because equity markets closed, and it's going to show that equities closed at the highs, right? And then after that, that's when equity started to sell off. So that's one of the reasons why they do it. So it's not marked down that we had a huge. It's not going to. They're not going to remember it, because printed equities closed at the highs. But at the end of the session, this is where we got that downside reaction. Okay. Um, we had ADP employment, which did come out higher than expected, a really, really high print, but remember the data that we had before, job openings came out worse than expected. ISM is lower. Then we got ADP because still remember Friday, guys, is going to be uh, NFP data. So we're still going to have to focus on that by the end of the week as well. Like what I was saying here, when this headline came out, this is what caused that risk on reaction, right? Right here, when emergency measures to guard economy from Trump's tariffs. When we saw that, that's when I think it was more of an overreaction, but we saw some upside in European equities. We saw that the euro currency started gaining strength once that headline came out. So moving forward, there's also, I think, Thursday. So it's Thursday. Well, tomorrow the ECB, the Euro politicians is going to speak on tariffs, and then we're going to see what they're planning to do to help their economy on tariffs. But right now, with this tariff hit, it is definitely bad for Europe, and I don't like, I don't want to mess with the dollar, right? But it's a possible, like we could, like GJ, we could already see like GJ is just really melting. I like like Euro JPY more of a better opportunity. If just trying to see if the moves already happened. I understand, but if this continues to impact Europe in a negative way, like man, these sales would have been amazing. Something like GJ sales, like the United Kingdom is not as bad, but Europe, they're gonna get hammered, right? So if we see that this gets worse for Europe, maybe you can set up better sell opportunities for like for Germany, right? We could see that the European 50 could push lower. There's a possibility that the German 30 could start taking a hit too. If we could see that these reciprocal tariffs actually impacts the European nation a lot worse than expected. So it's something that could be a really good tradable opportunity for the future. So something just to really focus on. But right now, sorry, this risk off market is definitely causing JPY strength. So when you go through the course, guys, this is everything is there. When it comes to risk flows, like when you go through the course, like everything with risk flows, this is what helps you with the direction, right? So this is how you could tell it's not gambling because you're understanding what's really going on and what's really being impacted. But now moving forward, right? Dollar still in a range, So what I'll probably look at is to see what the dollar do for the remainder of Asian session, right? Because if we continue to get a risk off market, this could cause strength in the US dollar, right? As a safe haven perspective. So if we see that happen, then I would say it would be really good opportunities to focus on the dollar, for taking sells on euro, like euro USD sells would probably be the best bet due to the dollar strength, right? And I like dollar strength as well because that still's going on with it's a great opportunity for the uncertainty with the central banks, right? Especially the Federal Reserve. So we still see a stronger dollar, right? I would like to see Euro USD breaking below 1.08 thousand, right? If we could stay below that zone, it's a high risk sell, but safer sells could be below 78 800, and I'll put the alerts there too so you guys could look at that as well, the alerts at these two areas here. But if dollar just somehow gets weaker, and if we see that Europe they start doing negotiations to better tariffs, right? Or if we see that they're do like whatever they do to help boost their economy, I don't know what options they have when it comes to that. I don't think the ECB is going to get involved. Like they're not going to get stimulus from the ECB. I don't think that would happen. But if we see anything with like any economy, right, any country that sent their central bank is willing to do QE, that's going to weaken their currency and strengthen their stock market, right? But I don't think the central banks is going to get involved because it's more political, and it's just more of a factor of them fixing it on their own. I don't think, but you never know, because if the ECB gets involved, right, that would still weaken euro, but it would boost their economy, But so that would be good for the stock market. But that's another reason to look for sells. But if we see that we get a weaker dollar, breaking above 1.08300 would probably be a good buy opportunity if we see the dollar continues to weaken. So I would just look at those two areas. I put the alerts there for EU as well, just in case, for so we could take advantage of that. And I know one of you guys was talking about EU. I mean AUD USD. With a risk off market, AUD USD is really good because the AUD currency gets a lot weaker, especially with all of this stuff going on, you know. And yeah, look at oil just melted. Oil would have been a good option too. But like this is causing a lot of uncertainty, and let me see with copper. Copper pushed lower too. So Dr. Copper, right? So copper pushing lower, oil pushing lower. This is a sign of uncertainty and plus downside in US equities. So this is more like a slowdown in growth, recessionary fears. That's what we're really getting right here. So I like the idea, but it's tricky because commodities as a whole taking a hit, and if we even see silver taking a hit right now. So if we see that it's a possible, this happened before, all right, like this happened once where we saw commodities drop like as a whole like this along with equities. We saw it all happen one day, right? That we just saw that. So I would still say focus on price action, right? I still think that, you know, I just look here for gold because I understand, when it comes to sentiment, the question is going to be, hey, how come gold isn't rising? But I just showed you how commodities are acting as a whole. And it's a possibility if this continues to go this route, and plus silver is taking a huge hit. I would personally like the idea, especially for you guys. I'm gonna look at silver because I like this pullback that we're getting in silver. Because silver is hitting all time highs, and if we could see silver push, like, if we could get it down to like 33.0 or a little below 32, like I'm gonna look at the support area, and I'm gonna mark off key zones for silver as well because I think it could be a really good buy. If we could get a significant pullback and then just try to hold that shit. I think that would be a good idea. Just look at the market structure for all this year with silver. It's not going to move aggressively. I don't think silver would hit like $60 an ounce. Probably no time soon, right? But as of now, like, I would just be cautious. I think buys would happen eventually, but probably sometime in the future to see what this pullback does. But still, I will watch this. But what I was saying before, we had this reaction before with commodities was just taking a huge dive, and even equities was pushing lower. And then the question was like, yo, what the hell happened with gold, right? And then gold just melted. It is a possibility we could probably see that again, just because all of commodities that we're seeing as a whole of commodities is just taking a hit. So it's a possibility, so just be open minded for both scenarios, right? So when I was talking about gold, now I'm gonna go over gold price action. So if obviously if gold goes back below this range right here, 31.33, right? It's going to be a higher probability we could most likely see gold continue to push lower back into the range, right? If you want to take those sells here, I would say yes, it could be risky because we could always see gold hit this area of 31.27 and then push up for the remainder of the day. It's a possibility of that. But if gold stay below 31.70, right, then there's going to be a higher probability gold may retest these lows. Okay. Do I feel like gold right now is going to like melt the way that it is? Maybe, maybe not. Right. But always the safer sells is going to be below 31.10. So if we start breaking below 31.10, I would personally think sells below 31.10 is going to be because we got de-escalations. That's what I personally think those sales is going to be because is going to be because of de-escalations. All right. So we already breaking below structure now. And I probably have a feeling either some of you are like, what the hell is going on? Or y'all in sales already because y'all focusing on technicals. Either or is okay. But sometimes it's 6:30, and most likely waiting until after 9 would be the best bet, just to get a little bit of volume in the markets because that's what an Asian session, Tokyo session, Australia session, Cindy, a lot of the markets is going to be open, at around 9, 10 o'clock. Okay, so you could focus on that, guys, if you want to look for opportunities, right? But if gold could hold above the structure right here, and we see that, we could form an order block, and then gold start breaking above resistance, and you want to take those buys as it continues, like, I think that's okay too. But I would just try to focus to see if we get a risk on market. And I would me personally, I think waiting until like 8, 9 o'clock, probably like 9 o'clock, just to see if we could get some momentum in the markets and try not to rush for entries right now. All right. And just be cautious. If you're not in sales already right now in equities, I would personally say just wait, because if you're not in sales, there's no reason to rush into it at the moment. So I'm gonna look at a US 30. So we are testing that this key area of support. So we didn't break below these lows to make a new lows for the week. If more likely, we're gonna reject that area, right? What I would like to see if we get a risk off market still, if we could probably come to 41,400, then we could possibly look for sales breaking back below there, right? or take the safer sells once we start breaking back below 41,200. So those would be the two areas where you could look at, just for those continuation sells. If we see a risk on market and we could see the markets recover, price breaking above 41,600 would be ideal for those buys to come in place. Because if price goes back up to there, more likely to we're going to see a recovery on the move. But it's probably going to happen with reasons in the markets, right? It's probably going to be a reason. So if we see de-escalations, expect equities to probably recover. But if we see escalations continue, you possibly could take another scalp as it starts breaking that support lower. All right. So just definitely record that, take a screen, pause it so you could get those areas of interest to focus on. Now, looking at NASDAQ, same idea. Price action is a little more different, but this is definitely impacting tech stocks. So I like the idea of equity, same thing with NASDAQ too. I would prefer to see what kind of range we could get here. So I want to see sideways price action. If we could see some sideways price action and we could see that NASDAQ is staying below 19,200, if we can start breaking back below that area of support, that's where you could probably take advantage of some more downside. And the same thing for the buys. If we start holding back above 19,200, to me, technically, that's more likely going to recover the move and we're going to see some upside. But again, to see upside in equities, I would only want to take that if we have a reason. All right. So I don't want you guys just to just hope and pray that we get a recovery. I would like to see that once we get a reason. Okay, guys. So just be cautious when it comes to that as well. I think that's really it when it comes to, yeah, equities, gold. That's really pretty much it, right? We covered the dollar, just a ranging markets, right? I think EU will be the best bet for themselves to come in place. So yeah, just finishing up the market update for you guys then. Uh, so we could just see here, Iran, we're ready to indirect nuclear talks with the US. So see how this goes. When is the next meeting going to be? Because again, like de-escalations with Iran is going to be key for us to pay attention to, because obviously if they start ending those wars, like this is what the nuclear talks is the main focus for the US. And if they could de-escalate that and take the nuclear away from Iran, then I think the US is going to, that's what's going to stop the US from more like really getting involved. One of the reasons to help them not get involved. So that's optimism. So now upcoming data. So we just had Australia PMI. Later on, we're going to get Japan PMI. London session, we're going to have Swiss CPI data. We got European PMI data and UK PMI data. So will the markets care? I mean, I think the tariffs are still going to be the main driver. But again, if we get like stronger Euro PMI, right, that's probably just going to set up for better sales later on if they don't fix the problem. Something just to focus on. But remember what I said about Euro earlier about paying attention to uh, those comments on how they're going to fix their economy, how they're going to combat tariffs, right? Because that could also impact Europe more than economic data. UK PMI data is what I like to focus on too, but that's at 4:30. And like I said earlier, like tariffs is not really impacting the UK. So trading economic data for the UK probably would be a good idea. Then New York session, we got jobless claims, we got PMI at 9:45, and then ISM at 10. So coming back to New York session, right? Economic data at that time going to probably be important, but we know that Friday is going to be NFP. All right, guys. So I would personally say try to be patient, guys. Let me see what you guys are doing. 410 days. It's fucking awesome, dude. Yeah, man. Have like amazing job, guys. You killed it today. Yeah. How much lower do you think equities? Yeah, that's the problem. Just to answer your question, I want to see. It's a possibility we could probably see a range, man. I think we're gonna see equities ranging. Until we see something new. It's gonna be tough to see equities continue to sell off the way that it did. Like this person personally, like this sell off that we had right now, I don't, just to zoom out, just look at market structure. You know, it's already in a range, right? So we got this drop, which is significant. But as you can see, it's like if we just I just draw a box, right? We're moving sideways. So up here we're trending lower. As you can see, like price action is pushing lower, like over and then over here we're just sideways. So I it kind of looks like the markets is done selling off, that we're getting these sells, but it's not breaking all-time lows and we're seeing a trend lower. We're not seeing that, so I will just be patient to see how this goes, because if we break below, like I said earlier, we break below that support, then I think that's the new trend, that we were probably going to see a new low get formed for, yeah, because like it is or is looking like we're about to hit that next leg lower for US 30. Like we got this leg, pushing lower. Now it's ideally we're going to get a pullback, and we had the pullback, and now it's looking like we're going to get that lower low. Obviously, I don't think it's going to go that deep, but it's a possibility. We could possibly see a new low get hit, probably hitting 440K. I think if it was going to happen, it would have happened already. So just look at the move, because he did it at a shitty time. That's the reason why. Because if you look at the like these other candles, you would expect it to happen here, and then you look at how this candle is. This candle is even bigger. It could be my feed, right? I probably checked my other day. Like, would this be the candle? I don't think so, because that's the other days. Uh, Let me just double check real quick. Yeah, it's probably, yeah. So it's just my feed. Well, this was, yeah. So okay, so more likely it's just the feed. Hold on, let me try to change it. Yeah, it's the same thing. So if this is the whole candle, like, because if this is the whole candle, then yeah, that this was considered a big move for the day. This was definitely a big move for the day. This probably could be one candle in your broker or something, but it's tough. I want to see a range first, and then we just need new headlines, and then we have to see if the markets is going to continue risk off or it's not. So that's what's going to be important to pay attention to moving forward, guys. So just be cautious, and if you guys have any questions, just reach out, and just reach out in the chats, guys. Like if you guys are interested, if you need help with anything, just reach out. The Also this as well. So for FTMO, if you guys want to use it, just make sure you put Lion Empire, and I think it's 10% off between. I don't know what it is. I think it's 10% right now. You get 10% off. So the promo code and the link right there for FTMO. As y'all can see, fucking Carlos was withdrawing every goddamn day. But all right, guys. See you guys later.